Hello everyone, and welcome back to Prosperity Funda, your go-to channel for all things finance and investment. I'm your host, MG, and today we are diving into a topic that has been making headlines around the world: the impact of the Israel-Hamas conflict on the Indian stock market. Before we get started, if you find this video informative, don't forget to hit that like button, share it with your fellow investors, and subscribe to our channel for more insightful updates. Now, let's talk about the situation at hand. The Israel-Hamas conflict has been a cause for concern globally, and investors are understandably keeping a close eye on its impact on financial markets. So far, the Indian stock market has shown resilience, but it's still too early to make a definitive judgment. Investors should pay special attention to companies with direct interests in the region. Some Indian companies, such as Tata Consultancy Services, Infosys, Wipro, Adani Ports, State Bank of India, Larsen & Toubro, Bharat Forge, and Sun Pharma, have business operations in Israel. These companies could potentially face challenges depending on the duration and severity of the conflict. One major factor to consider is the rising oil prices. If the conflict persists, it could put pressure on the Indian rupee and impact companies that rely on oil or its byproducts as raw materials. So, what should investors do in this situation? Now, it's important to note that we are primarily addressing long-term investors here, not traders. Short-term market dynamics can be extremely volatile, and traders have their own strategies. Long-term investors should resist panic selling. Risk-averse investors might consider reducing positions in companies with significant and direct business operations in the conflict region. However, if a company's revenue from that region is minuscule, there may not be a significant cause for concern. For those investors who have been patiently waiting on the sidelines for an opportunity to invest, this could be the time you've been waiting for. But remember, the market hasn't fallen yet, so exercise caution and wait for potential corrections before taking positions. Additionally, when considering investments, focus on market leaders. These companies often have the capacity and resilience to bounce back from challenging situations. Also, keep an eye on sectors that may be indirectly impacted. Industries like paints, adhesives, and chemicals could see negative effects due to a spike in oil prices. If you observe major corrections in blue-chip companies from these sectors, it might be a good time to consider buying. In conclusion, we all hope and pray for a swift resolution to the conflict in the Middle East. Until then, investors should stay informed, stay patient, and make well-informed decisions. That's all for today's video, folks. If you found this information valuable, please like, share, and subscribe to Prosperity Funda. And as always, may your investments be prosperous and your financial future bright. Thank you for watching.